Hello, everybody. Good evening, and welcome to Dividend Stock Talk with James Gardino Sr. Hey, here at Dividend Stock Talk, we invest in dividend stocks specifically for monthly and weekly cash flow. Today, I usually always do this first. Today is September 13th, Wednesday. It is 9:31 p.m. I'm sorry, I'm a minute or two late. I was tied up doing another project. Sorry. Okay, that being said, let's just jump on in to what we are doing this week. We had a lot of activity this week. Oh, wait a second. Here we go. All right, here. Logging into our Thinkorswim trading account. This is the one that we do a lot of options. Strictly options on this account. Now, we trade 4 or 5 different accounts. One, specifically dividends. You know, dividend capturing, where we buy the stock, collect the dividend, turn around and resell the stock. Next is what we call dividends on steroids. That's where we buy the stock 10 days before the EX date, wait for the run-up, and try to get 2 to 3% increase from that dividend. From the stock based on the upcoming dividend payment. Then we have double dividends, which some stocks do increase from valuation before the EX date, twice the value of the dividends. And fourth, we do options with companies that have dividends. Now, why do we do that? Because we find that a lot of companies coming into the dividend season, or for lack of a better term, see every day there's a company or 2 or 3 paying a dividend, which means every day there's a company going EX dividend. Now, because of that, it allows us to do trades almost every single day. Every single day we take a quick look and see what's going on. Now, you may think I looked already at the market today. I have no clue. I just turned my computer on. I didn't even check my account. I went right to the broadcaster, jumped on. So the outcome of what happened today in the market, I'm totally oblivious until I actually go to that screen and actually start looking and digging into the data. Really? You know, believe me. Well, anyway, I have no clue what's going on. So let's check in and see what actually happened today. I only got 1 order filled. Really? 1 order got canceled. Which one was that? Potash. They didn't take potash. Why didn't they take potash? Okay, POT. Now, we did these last night to take a look at what was going on. But let's take a quick look at potash, because potash has a dividend coming up in 10 days. Potash starts the year out at the $16 trading range, and it trades there for about 2.5 months. And then it jumps on up. It keeps going up, 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 up. It finds the high of the year at $20. That's not a lot of money. After hitting the high, she stayed there for a day or so, came back down, right back into the $18 trading range. And from there, slowly took her about 3 months to get back down to the $16 trading range, which she started out the year at 16. Hey, you know, she begins the year at 16, ends the year at 16. What's the big deal? Collect the dividend, get back out. Now, what we do here, the trading we do here, we really don't care if the stock doesn't go up. As a matter of fact, I would prefer the stock to just stay the same. You know, hell, take a vacation, take a couple more days break. No, you're at 16? Hell, stay at 16 for a couple of days. Okay, that being said, $16 range, she jumps back up to the $17, $18 range, and then she's been there for the last couple of months. So today, she had a down day. She opened up at 18.24 and closed at 18.20. So then why didn't it take my my spread? All right, well, let's do another one. Let's see what it looks like. Create a duplicate order. I don't have to do too much work. Just create a duplicate order. There we go. So what's happening? We have 2 days left, which is Thursday and Friday. Okay, and we're looking at the 17.5, 18. So as long as she stays above 18, we'll be good to go. Now I have to go back to the option chain, back to the, what do you call it, the spread, and we want the vertical spread. There's so many. Did you see that? All those option strategies, unbalanced. And then once you get to unbalanced, you got butterfly, condor, iron condor, vertical roll, deep and wide. Look at this one. 4 month, 4 strike, and then you get diagonal, vertical roll, unbalanced. That, oh wow, it is like crazy. And then you get that one, that one, that one. Okay, 4 months, 3 strikes, 4 months, 2 strikes, 4 months, 1 strike. And look at them all. That's just the deep and wide. Then you get unbalanced, and then you get double diagonal. Cool. Okay, collar with a stock, vertical roll, iron condor, condor, butterfly, collar, or synthetic combo, a covered stock, strangle, straddle, diagonal, calendar, back ratio. Back ratios are awesome. Back ratios almost allow you to do free trades. It's cool. All right. Vertical and single. Now, single you use when you're doing covered calls. It's like you buy a stock and you sell off an option for somebody to buy it for you the exact same price you did. Then you're lining yourself up to collect a dividend or collect a premium, one or the other. If you can collect both, hey, great. If not, do a covered call. They're the easiest, simplest, and they're very profitable. Easily get double-digit returns with just a simple covered call. Almost any broker will allow you to do those. Verticals is the ones that I like. Whoops, let's get back. Where were we? Verticals are the ones that I like. It's where you buy one option and then you sell off another one to offset the price to get you into a better position for a higher rate of return, whether the stock moves or not. Now, we're going to jump in and take a quick look at Potash, see what they're offering, and then go from there. Now, I'll explain it to you a little bit more why I like the vertical spreads. Okay. Now, the stock is at 18.20, so we want to look at the 17.5, 18, which is right here. And how much is it going for? 45 cents. Now, there's only 2 days left. So am I going to do the 45 cents or am I not? Now, how much is 45 cents going to give me? Wow, that's not even worth my while doing that one. You see, I'm going to make 50 bucks off of it. It's going to cost me $16 just to do the trade. So you know what that means? It's another $16 on the way out, which means I'm going to be making like 30 bucks. But 466 bucks in and getting 50 bucks out, which is right around 10% for 2 days. I don't know. You know what I'm going to do? I'm going to do this back at 40 bucks. Sorry, I'm going to do this back at 40 cents again. So let's see if they do. If they do, great. If they don't, who cares? Ooh, you know what? I could go 9 days out. What does that one look like? Come on. Oh, really, people? 9 days out. The 17.5, 18. 18.50. Even a week out? Can't be that bad. Really? Okay. Anyway, let's get rid of this one. $18. There we go. And I am going to put this at 40 cents. They might go for it, they might not. Now let's go back to the 50 contracts. Well, see, that way I can still go for the 25%. 25% is doable for me. I like the idea of 25%. All right. Let's see what else we got. Now, we said last night, oh, let's go back to monitor. MDT, they took MDT at 36. Okay, so I can get my 25% off of MDT. Now, what did MDT do today? MDT. All right, so MDT starts out the year 85, travels about a little over a month at the 85 area, drops down to 82, travels out a month 82, another month at 81, and then she proceeds to get down to 72 and trades for almost 2 months at 72, and even just so happens to find the low of the year at 69.39. From there, she takes about 6 or 7 months to get back up to a high of the year of 89, and then she drops back down to a trading range of 80, 81, where she is now. Now, she dropped down today a little bit. MDT, which is the one we're looking at, right? So we get the 81.5, 82, which means we want the stock to stay above 82 by the end of Friday. Now, I already got into it, so there's nothing I can do about it. She's 81.93. We want the stock to stay above 82 in order to make our 25%. Right now, we're still making money because I believe the cutoff was like 81.40, 81.50, something like that. Where anything above that is still profit. We're still in the profit right now. If she closes right here, guy could turn around on Friday afternoon, sell it, and still make a little bit of money off of it. Hey, money's money. I'm not going to shy away from it. All right, potash is up and running. So let's go to the market watch and see what we have. We have 3 stocks left to look at. Today's the 13th. The week of the 27th. 12 companies. Come on, here we go. Now the last 3 that we haven't looked at yet. All right, we looked at potash, so we watched some of those. We have 2 days left. So let's take a look at PXD. PXD. Now, guys, probably should have bought some of these things, at the beginning of the week. PXD, Pioneer Natural Resources, starts out the year at 179. I usually don't like to get into stocks over $100 because it kind of really digs into my return. I don't know why. This thing's been trading in the 172 to 194 area for 8 months, 9 months. Yeah, just about 9 months. And then slowly drops down. Ooh. Found the high of the year at 199.97. Oh no, 197.77. Wait a second. Yeah. Okay, the high is 199.83. Okay, so 199.83 is the high for the year. And she took a few more months to find the low of the year at 125.70 bucks. That's let me think. What is 70 bucks off of $200? That's almost 30%. Almost. Okay, so she drops 30% in 6 months. So she's trading at trading range 135, 136. Wow. Wow, I should have, see. Now, if you guys watched last night, you noticed I had 3 left to go. PDX, VER, and WDC. Had you jumped ahead of me and done those 3 on yourself, you could have caught this nice little move. Look at that, 135, 130. She opened up at 130 and hit a high of 136. Wow, she closes at 135.51. We could do this one, but when I see a big move like this to the upside, even though she has a dividend coming up in 10 days, I'm a little reluctant to say that she might have a little bit of a pullback yesterday because it's such a high jump yesterday. You know, from 130 to 130, you know, that's a 4.3% move, $5.59. That's a big move for one day for a $200 stock. Well, $130 stock. Anyway, let's see what the numbers look like. PDX. Oh, PXD. Sorry, PXD. PXD, the 135s. 134, 135. Oh, so as long as she stays above 135, that's even doable. I mean, if she stays above 135, that's a nice profit for 2 days. Do you see it right here? She's at 135.51. Now, a big up day like that usually has, all right, I have to do this before I move forward. Take a look at the chart, the seasonality, and see what this thing normally does this time of year. Oh, come on. Look at that. This is where she is now. Normally, tomorrow you see a small little uptick, and then Friday you see a nice uptick. Oh, how can I pass that one up? All right, so that being said, let's move right on into... Okay, so if we do the 134, 135, I know it's $1 spread, but I'm paying 63 cents for that. Do you know what that means? Let's look at 50 contracts. Okay, I'd be putting in $3,200, and I'd be making $1,850, which is over 50%. Over 50% return for 2 days. 2 days, Thursday, Friday. The only thing the stock needs to do is just stay where it is or go up. Actually, it can come down too. You know, this is a nice one. I like this one. See, it's at 135.51. Okay? If the stock stays above 135, we'll make over 50% for the 2 days. That is an awesome trade. Now, there's a lot of things going for the stock right at the moment. It's got the dividend coming up in 10 days. It's a nice dividend. Not the greatest in the world, but it's a good one. Both the seasonality chart looks good and the regular stock chart looks good. You know what? Before we make a decision, let's take a quick look at the 10-year chart. And if the 10-year chart looks good, this is the only one I'm going to give you guys for today. And we're going to take a quick look at the 133, 134. Okay, that's 90 cents. And what does 90 cents look like? Like 11 or 12%. But that gives you $1.50 to move. That's a big move. $1.50. Okay. What was he doing? Oh, yeah. 10-year chart. Wow. Okay. So, 10 years ago, this was at 193. She made a 10-year high of 235. From there, she spent a little while coming down to find a new low at 103. I don't know the exact date of that because it also says, oh, 2016. All right, so that's my whole 10 years. All right, so 10 years ago, she's at 135. Okay. In 2007, she's at 135. Goes sideways for a few months, finds a low for the year at, you couldn't be kidding me, really? In 2009, oh yeah, that's right, everything drops to the floor. Wow. Wow, can you believe that? Look at that low. 10 years ago, well, not 10 years ago, in 2009, this thing hit a low of 1188. 1188 was the low. And here you are 10 years later, things up in the 200s. Okay, as you see, the stock moves. Come on. Let's get this thing moving. Okay, so it goes up to 120, 135, 136. Look at that, 230. What is that? 2013, this thing hits 230. Look at that one right there. 2014, she's at 233. Yep, okay. So she's at 135 right now. All right. We don't know if it's going to go any lower because it had a low 2016 in January of 104. Up, down, all around. This stock is all over the place. It's like 8 years ago she had a low, or 9 years ago she had a low of $14 or $11. She had a high of 230. Now she's at 135. And this could be a bottom here. You don't know. All right. We just don't know. Because you see, it's the bottom there. This could be another bottom here. Who knows? But she's in a little bit of an upswing now. All right. See that? A little bit of a drop. A lot of volume there. Actually, I like quadruple the average volume. End of July to the beginning of August. Huge drop. She goes from 163 down to 135. So that's $30 they lost. But since they lost those $30, she'd be going sideways. 2 up days in a row. And the 135, the 134, 135 is offering me over 50% return as long as the stock stays above 135. And I think I am going to do that one. Look at that. I got up $3,200, but the most I can make off this is $1,850. That is over 50%. How much exactly? Do you really want to know how much exactly? All right, let's quickly look at how much exactly it is. Numbers, numbers, numbers. $1,850, 3226. 1850 by 3286. All right, I don't know about you, but 56% return in 2 days is pretty freaking awesome. That's what we're going to do. This will be the last one I'm going to give you for today. All right, buy 50 contracts, vertical, PDX 100. 15th, which is 2 days away. September 2017, the 134, 135 call spread at 63 limit order. I could do the market order, but who knows? We'll see what the market is tomorrow. So I'm not working tomorrow, so I'll be here tomorrow, first thing in the morning, checking it out. Do you guys want to hang out and watch it with me? I don't know. All right, then. Off to the races. There we go. So, market watch. You know what? I'm going to do those tomorrow morning. VER and WDX. I've been here long enough for tonight. That being said, Dividend Stock Talk with James Gardino, where we look for investing in dividends strictly for monthly and, more importantly, weekly cash flow. We have a weekly option. Actually, we have monthly options this week, but I'm only looking at the weeklies because they're, for some strange reason, the companies that offer weekly options are more profitable than the companies that offer only monthly options. Just the way it is. Sorry. All right. That being said, I'm out of here. Well, let me check and see if I have any questions first. No questions. Alrighty. Well, this is James then from Dividend Stock Talk. You guys have a great day, and I will see you here mañana, first thing in the morning. You guys have a great day. Bye.